It is the week of December 8th, 2025. I'm Tyler Sherven with our co-host CJ Gettelfinger. Welcome to today's installment of the Weekly Sift Stack.
Tyler, really excited for this week's episode. We're going to switch things up a little bit with the stock of the week. I know we've been talking a lot of those Mag 7 AI companies, so we got one a little bit different for you. We're going to be covering SOFI Technologies this week. And then also, Tyler, I mean, the news that's just been, honestly, it's in everybody's feed this week is Netflix. Is Netflix literally going to just own the entire streaming industry outright?
Everybody could be in the Netflix and chill at this point. Who knows?
It might be. I saw a funny meme. It was a picture of someone at a movie theater, and it was the screen, and it was like too many screens logged into the same account at the movie theater. It made me laugh a little bit.
My gosh. And to think that just some years ago, Netflix was saying they were going to go broke with all these shared accounts. And what do you know? They are on top of not just Hollywood, but global entertainment.
Seriously.
Alrighty. So now going into the indexes year to date as a market close just this past Friday, December 5th, 2025, we're seeing the S&P 500 had another strong week, up 18.22% year to date with dividends reinvested. And now this is just a 0.25% off of its closing all-time high. So we're really starting to rake in there. Now, kind of the bigger news that we're seeing, the Bloomberg US Aggregate Bond Index trailed back a bit, up 6.94% year to date. Now, we saw yields go up across the entire bond markets, and we're actually seeing the 10-year Treasury yield up to 4.139%. So we saw these yields, they ticked higher across the board, even after the Fed's favorite inflation gauge, the core inflation, came in a bit softer than expected. So September's annual rate landed at 2.8%, and this was revised from what we had previously seen. And this gave Fed a bit more cover, a bit more assurance and confidence going into that 0.25-point rate cut next week. So we saw the equity markets certainly continue to rally on that. But what's important to note is that these lower inflation numbers are also coming off a rougher American labor market than we have seen. I know that we all kind of feel it. It feels like it's silent in the background, but what we're seeing this year is that there's been over 1 million job cuts announced throughout the year of 2025. Now, this is the most since the COVID year of 2020, and this is only the 6th time we've hit over 1 million job cuts since 1993. And this is according to the placement firm Challenger, Gray, and Christmas. So a couple facts, couple interesting questions for you here, CJ. Take a guess at what has led in the job cuts for 2025.
I'm going to take a bold leap here and say AI.
Good guess there. It was actually the U.S. federal government. The Department of Government Efficiency had actually led the way in job cuts with 300,000.
Wow.
So almost a third of the job cuts of the 1 million layoffs this year have been due to the Department of Government Efficiency. I know there's a lot of debate as to how they're creating the government efficiency, but yes, 300,000 of the job cuts are due to that.
Now, as long as they keep my national parks open, I'm good with it.
That's where it's at. We got to make sure we're going to enjoying our time at Yosemite National Park, but yeah, that's what's been leading the way here. Now, of course, CJ, as you mentioned with AI, that's also a big part of the cuts that we're seeing with a lot of the other companies as they're looking for methods to become more efficient or testing out new customer service roles or new engineering roles in which that can be done by an AI rather than a human. But more data is to be seen. So right now we're seeing overall the general sentiment appears to take on that the inflation is easing. The Fed is still in control. There's no need to possibly rush those deep cuts into 2026, but maybe just maybe that current labor market could use a bit of easing there.
Yeah, I think as we see what they decide to do on Wednesday, I know we've talked about it pretty much every week leading up to it. I do think that rate cut will come. I'll be intrigued to see how the market actually reacts to it though on Wednesday. But switching gears, Tyler, really excited. Company that I've loved for quite a while, SOFI. So, like I mentioned, I know we've talked a lot about a lot of these Mag 7 companies, a lot of big AI names. With that, for all of you who are not familiar with SoFi Technologies, I just wanted to give a little bit of background about the company. They are a personal finance company. They are a 100% online bank. They offer a wide range of financial products, your standard checking, savings accounts, student personal loans options, mortgage financing, mortgage refinancing, investment accounts, insurance, a little bit of everything, right? Just think of them as your standard bank with a little bit more product. And the one thing that really sets them apart, though, is they are 100% online. No brick and mortar at all, 100% online. So, depending on where you fall, how you feel about that, I think that that kind of
Oh,
speaks.
I'm a big fan of those online
I
banks.
personally am too.
I like the
I personally
convenience.
am too. And you know, it kind of helps with the budget sheet. We won't really dive terribly deep into that, but it does help with some of those overhead costs, things like that. And it also gives them the ability to do what they've been doing really, really well. So SoFi has really come on in the past few years as a big player. They have been able to offer a lot of really good sign-on bonuses, a lot of really good like high yield savings accounts, things of that nature that have really kind of helped grow their market share. Not to mention they're also SoFi Stadium partnered with Justin Herbert. Any of you big Chargers fans out there, you may be pretty familiar with SoFi at this point. But there's a lot of places I wanted to start. I thought the first place is something we should start with is going to be the market cap. I know we've talked about a lot of pretty much everything we've talked about so far on our show has been nothing but mega caps. SoFi actually pretty much all of 2022, 23, and the most of 2024 was actually trading in that mid cap market weighting. So that's going to be a company that's got a market cap of around 2 to 10 billion, in between that range. Once you get beyond that 10 billion, you're going to kind of mature into what would be referred to as that large cap scene. So definitely a little bit more of a smaller company that we're talking about here, but they've had really, really good growth. And I've got a few numbers that I want to kind of show to help back some of that. With that, if we look at some of their year over year revenue to just speak to some of the growth that they've had, if we were to start in 2022, their total revenue for 2022 was $1.76 billion. That was a 62% increase from 2021. If we look at 2023 revenue, that was just shy of 3 billion. That was at 2.9 billion. That's another 65% increase year over year from 23 to 22. And then the full year of data for 2024, they had revenue up to 3.76 billion. So another almost 30% increase in revenue. So clearly a banking company that has really been growing their revenue. And a lot of that's just going to be coming from foot traffic from users. But what we want to focus on and talk on is when we look at their stock and we look at how they've performed, especially when we talk about a company that's a mid cap. And we mentioned a few weeks back with Oracle, how that was a company with a lot of debt and how you could see how interest rates really make a big change for them. Well, you got to think when there's a company that's even smaller, when you're talking about a smaller mid cap type company, interest rates really have a huge play for them. So if you look at the stock price for SoFi, it kind of coincides pretty perfectly with how the yield curve has been going. The stock performed pretty well in 2020 and 21, and then it got absolutely hammered in 2022, and then it's slowly been recovering since. So they really respond well. This is a type of company that responds really well to some of those lower interest rate environments. And I think that's playing a little bit of factor as to why you're seeing them grow, because they are a smaller company still trying to grow a lot. The next thing that kind of leads into that perfectly is actually looking at their beta. So Tyler, are you familiar with what beta is?
Yeah. So the beta figure or beta coefficient, this is a quantitative measure of a stock or portfolio's volatility and systematic risk compared to the overall market. So when we're seeing like the S&P 500 index, that beta is typically defined as 1.0. So when we see companies, stocks, or mutual funds, ETFs that have a beta lower than 1.0, it means that they have less volatility than the stock market or the S&P 500. Over 1.0 means that we're seeing greater volatility. So I'm curious to hear what
Yeah,
that SoFi beta
exactly.
number is now.
So SoFi's got a pretty aggressive beta. They come in right around 2.0. So
Oof.
essentially, right, you're getting a lot of upside, but also some extra downside there. So as Tyler just explained, let's say the S&P 500 is up 10%. You could roughly maybe expect to see SoFi double that, up 20%, or vice versa. S&P's down 5, you could see SoFi down 10%. That's essentially a good way to look at beta. But so wanted to kind of throw that out there just because SoFi is a smaller company. Those smaller companies usually will have a little bit higher of a beta. They have more volatility. They make more drastic swings as compared to the overall market. But the real reason I wanted to throw this out there is because they had a lot of big news come out to end the week. And Tyler, are you familiar with dilution?
I might be a little familiar with dilution. We'll make it a little bit less dilutive for y'all. So, with dilution, right, this occurs when an already publicly traded company this issues new shares of stock. So, when this happens, it results in dilution of the existing shareholders' shares because the total number of shares increases, reducing each shareholder's percentage of ownership in the company. It could somewhat be thought of as the opposite of share repurchases. While dilution can negatively impact shareholders in the short term, it can be a necessary strategy for companies to raise funds and invest in their future growth.
Tyler, man, said it better than I could have said it myself. And that's exactly what we've been seeing with SoFi. So, a couple things I want to break down. On Friday, they announced a $1.5 billion share offering to do exactly what you just said. They're planning to raise more capital, promote some of that further growth. However, you saw the stock down almost 7% on Friday and down about 15% over the past 2 weeks. Well, why is that? It's a good question. I'm glad you asked it, Tyler.
Yeah.
So there's short term.
I really want to know.
There's short term and there's long term. You can kind of think of it as some pros and cons. So it's not uncommon that you'll see shares drop in the short term whenever there's talks of dilution. It's maybe have some fears that cash is getting a little bit tight. You also see what Tyler was mentioning, that actual definition of dilution is where you see ownership for the individual shareholders. It goes down. And lastly, when they issue more shares, you're going to increase that total number of shares outstanding. And that's also going to be dividing the profits. So that usually will result in some lower earnings per share estimates than what's currently been expected. So don't be surprised if this goes through and that you see some earnings per share maybe misses or some contractions out of SoFi in the future. So that's usually why you see some of the instant pullback that comes with what's referred to as dilution.
Now, CJ, I want to know how did you come across SoFi? What was your first experience? You were telling me a little bit earlier about this company.
My first experience was exactly what we talked about at the beginning, and it kind of just goes to the customer demographic. I'm a little bit more younger, more comfortable with some of those fully online banks, and that's exactly what I was looking for. I was looking for some banks, looking for accounts, some high yield savings accounts, trying to get some good bonuses, some referral bonuses, sign-on bonuses, things of that nature.
Oh yeah,
and that's really where I came
them up.
across them. They really offer really great sign-on bonuses for new users. And they've really been expanding that as well. But really, like I said, them being fully online, it gives them the ability to usually be able to just kind of slightly beat out the competition, be able to offer a little bit better insinuation for some of those new customers.
And I'm also curious, how would you say you'd compare them to, if you have experience with like Discover or American Express? Did you get are you finding like a different experience with SoFi versus those traditional online banks?
Slightly, I would say when you're talking of Discover and American Express as the two that you would name, let's even throw JP Morgan Chase out there. You're talking a little bit different, right? Maybe a little bit more apples to oranges in that comparison. But with SoFi, what I really like is it's all in one. I know a lot of these big banks have been kind of going that way more recently, trying to get kind of everything in-house, but that's really what SoFi prides themselves is it's your one-stop shop. And I know that in our industry, a lot of what we like to hear is consolidation, right? You like that consolidation, kind of have everything in one place, make it easier on yourself. And that's really what SoFi has started to push. And I think that they're doing a really good job and will continue to do so. So I know I gave some of the negatives about dilution. Let's look at the positives though. So if the company is already in good, strong financial health, this is just extra capital that can be contributed to even further growth. It can increase overall value. It also even give them opportunities for maybe some future acquisitions as well. That's one thing that smaller mid caps, like we've been talking about, some of those smaller large cap companies that are trying to grow, a lot of those companies have to grow through acquisition essentially. And so whenever you do a $1.5 billion share authorization, that could be what's behind it. Maybe they're wanting to pick up a smaller company to try to grow their users, that sort of thing. And lastly, just a few things to consider with SoFi. They've had really good user growth. That's really helped them over the past few years. You've seen that as some of the younger demographics getting into the workforce, people who are more comfortable using those online banks, they don't have to have brick and mortar. You've seen that grow. And honestly, I expect that to continue to grow. As you continue to have younger demographics come into age and you continue to have some of the older working class, settle out, I do think that you'll continue to see that shift there. And then lastly, one thing that could bode well for them as well is they're currently not in the S&P 500, but they have been in consideration to get picked up into the S&P 500. So normally whenever you see that, that's just going to help add to some of their share volume, some of their trading, things of that nature. Again, this is definitely a little bit of a different company than what we normally cover, but one I definitely wanted to go through today, and especially with that recent news, and help give our listeners a little bit of understanding as whenever you see the word dilution, what it may mean and how it may affect a company both short term and long term.
Hey, well, appreciate you, CJ, running us through SoFi. I was always curious to learn about it. Now, next up with our headlines of the week. First up, Netflix almost goes full Thanos, attempts to snap up Warner Brothers and HBO Max, an $82.7 billion media power grab. But Paramount has struck back. So Wall Street, Hollywood, and even DC were stunned by Netflix's bid for Warner Brothers. But the celebration did not last long. Now, there have been rumors that months previous that the Netflix co-CEO, Ted Sarandos, hopefully I got the name right there, had gotten approval, got blessing from the president, Donald Trump. But now we are getting some heavy skepticism going into this deal. So Trump administration is not 100% comfortable with this going forward. And even across the aisle, Senator Elizabeth Warren is looking to have a full antitrust review, calling this deal an anti-monopoly nightmare. So what comes next with the Paramount strike back? The company is considering a Hail Mary bid directly to Warner Brothers shareholders, and they're hoping regulators will view this offer more favorably. And meanwhile, movie theaters are sweating. I know a lot of us who Thanksgiving break, we're going out to see Zootopia, going out to see The Wicked. But if Netflix ends up owning a major studio, this entire production to distribution pipeline could be rewritten overnight. Netflix doesn't want people going into the theaters, right? They want people to stay back at home and enjoy movies from the comfort of their living room. CJ, what do you think
Tyler,
of that coming
man,
up?
this is a big deal. This really is. There's a lot to unpack here. I think it's hard to say what's going to happen. This has been hit with a lot of skepticism immediately. I mean, very
Oh, yeah.
quickly. It's been hammered down. You've seen Netflix's shares really get hammered over the past couple of trading days. And to be honest, I don't know if it's going to go through. I know that Trump does not seem to be very pro Netflix from what I've heard. I know he's not a huge fan of the company overall. And then additionally, though, like you were just saying, kind of that anti-monopoly nightmare. It's hard to see that this doesn't, in my opinion, get pushed to court. I don't think that this is going to be a smooth transition. I mean, you're talking about, like you said, them basically changing the entire industry potentially overnight. I don't know. This one's very interesting.
CJ wants that movie theater experience, and I don't blame him. I agree with you here, CJ. I think there's not, like I said, not just the Trump administration. There's support from across the aisle, bipartisan
Yep.
support of antitrust, as Netflix seems like it could take over
Yeah.
the entire entertainment space.
Yeah.
Big question is, can you all imagine The Sopranos on Netflix? That is going to be an interesting experience seeing it there. Well, the next one, McDonald's. I know everybody likes that Big Mac burger, but they are turning the heat up on value. So I mean, CJ, you remember those $1 menu days? Were you around for those?
I'm not gonna lie.
$1
Every
menu
time I
days?
go to McDonald's, which is far and few between, but I do ask for the dollar menu still. I pretend it's still out there, even though I don't know that it really exists these days.
Well, they are revamping that dollar menu. So they're going to roll out a new global franchising standards that they're going to grade franchises based on whether their pricing is actually delivering the value they're saying. And so this is a direct response to cash-strapped consumers that are pulling back. So starting on January 1st of 2026, operators will be holistically assessed. I'm not entirely sure what holistically means, but they are going to be assessed on their pricing decisions, even though that all these franchises are still technically setting the prices locally. So CJ, that's maybe why you're still seeing coming across that dollar
Yeah.
menu, where others are not seeing it as much. So value menus have, of course, they have been a huge source in boosting the sales, especially as higher income customers are trading down. But McDonald's says they're very confident these consumers' pressures are going to last well into 2026. And the tougher standards are, of course, going to frustrate some U.S. franchises. But though the company is going to offer new pricing tools and advisors to help out. But bottom line is value leadership is now a requirement and not a suggestion, as I think we would all expect from McDonald's, which is supposed to be delivering us those cost-effective Big Macs, right?
Tyler, I mean, I hope we can agree here. Like in 2026, a hamburger should not cost $1. Like there's that just can't be good for you. There's no way that you can go get a burger for $1, and there's no way you should be eating that.
You're telling me, CJ, that after one of your workouts, you never thought,
Hey,
stop at
listen,
McDonald's,
I'm a hypocrite.
give myself some
I am an
gains?
absolute hypocrite. I will go to McDonald's and, like I said, few and far between, but occasionally give me a large Coke Zero, $4 or $5 hamburgers, and it's good. But I don't know.
The Coke Zero is what offsets. That's what offsets
It
the
is.
burger,
The Coke
right?
Zero,
Okay.
no sugar in my Coke makes me feel better about smacking 4 burgers.
Well, I'm not gonna lie; those burgers can often make me feel like I had a 6-pack of beer the night before. But I'm just hoping that we do have more standardized McDonald's service across the board, because I think we can all agree that there's various levels of service across many different McDonald's.
Agreed.
So this can be good for all of us. And topping it off, on the Fed watch, odds of a quarter-point rate cut are continuing to climb for this Wednesday's Fed meeting with almost 90% probability. And this is climbing up 3% from last week's meeting, and according to the CME Fed watch. So on a poll question for this week, for all you folks out there, we want to know, does Netflix's potential acquisition of Warner Brothers bode well for the stock price? Answer 1 is yes. Answer 2 is no. The next thing that played out, though, was last week's poll results. How do you shop on Black Friday or the holidays? And the leading answer, with 57% of you voting, I am a big fan of the simplicity of online shopping and absolutely love missing out on the Black Friday stampede. Now, CJ, I know that you differ from that. You differ from the audience.
I do,
there.
but I'm actually not complaining with these results. 57 versus 43%. I thought it was going to be way more skewed. I would have put money on like an 80-20, 90-10 split. So appreciate all you listeners. I'm glad to hear that there's more than I thought in my boat who still love to get out in the shops.
Hey, well, I think we may have to start adding these bets to the Kalshi website or something, because the other crazy thing is that CNN has partnered with Kalshi, which is a very interesting partnership.
I don't know how to feel about that. I don't even know what that means.
I don't fully know either. So
I guess it's got to be for market
moves.
moves, right? I guess you can go log into CNN app now and start betting on what Jerome Powell's
betting
going to say
on the weather
Wednesday.
or betting on the news. It's gonna be a rodeo for sure.
Well, Tyler, let me finish this off this week, as always, with our motivational quote from CEO of SOFI, Anthony Noto. Building trust is the only thing standing between us and being the best. We won't stop until we're there. I think he hit the nail on the head for sure. That's exactly kind of what we were talking about with this company. SoFi's 100% online. It's a bank right there. You've got to trust them with your finances, those sort of things. Trust is obviously going to be a big contributor to their future growth, to see if they can continue to have the success that they've been having over the past few years. So, as always, we really appreciate everybody watching in this week. If you've got any feedback, we'd love to hear it. Other than that, everybody have a great week, and we will catch you next time.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.